welcome to the channel. In this video we're going to talk about Tesla. We're going to look at the daily chart, the weekly chart. Basically we look at the charts to give us a little bit of an edge. It helps us identify where price is going to go in the short term, long term. It helps us remain calm when markets are choppy. It helps us know when we've got a good price, when we can get good risk reward entries and then de-risk as things get a little bit spicy. Other than that, we're going to take a look at the short and long dated open options interest. That gives us a little bit of an insight in what the big boys in the market are doing. We're going to look at the Tesla news, see what's coming on the horizon. Is it exciting? Is there some bad news coming? All that good stuff. Other than that, though, if you can't be bothered to stick around for the main content of this video, I'm still super bullish on Tesla, and that's pretty much the key takeaway. Other than that, my live portfolio there is linked in the description below, and I've chucked it up on the screen there for you. Doing pretty good for the last 2 years there. Apologies for the weird light. It's super bright outside, and I've got a big plant in the window, so I can't quite shut the blind. So let's just look straight at the chart. We're going through a bit of a pullback in the market, and I think it's really interesting. There's a lot of bargains out there, but technical analysis isn't going to give us great insight right now. The market is an absolute free fall. That's quite hard to say. So I mean, all we can do is kind of nibble, buying more stocks around key areas where we think there could be a bounce. But I mean, I'm not expecting anything to hold until the sentiment changes, and we don't know when that'll be. I suspect this week, probably over the next few days, depending on the data that we get regarding the inflation numbers and all that stuff. So we'll see. But pre-market today looks a lot better. Yesterday's sell-off was unreal. I managed to get some really good bargains and buy some stocks I haven't looked at in years because they were on my too expensive to buy list. So super happy about that. Fundamentally, nothing's really changed about these companies. Still love them. Tesla, prime example of that. A lot of people saying this is the end for Tesla. It's lost, it's crashing. But in reality, it's only lost what it gained at the Trump pump, which we could argue shouldn't have happened anyway. That was too fast of a move up, and it was ahead of its value. I think Lily's joining us today. Hey, Lily. What was I saying? So yeah, we'll talk about some key levels, but again, I don't expect anything to hold until macro kind of shifts. So you can see where I've been adding quite aggressively. I expected this was a strong area where we'd get a bounce, so I loaded into that. We haven't held. We had that massive washout yesterday, down 15%. Bought a bit more there because that's a ridiculous move in the day. Could Tesla go lower? We could see sub 200 again on this one. Q1 I think is going to be quite weak. The Model Y refresh, everyone's saying no one's buying Teslas, but actually they just haven't had a lot. Well, obviously some people aren't buying them, but a lot of it's been driven from they didn't have cars to sell. Anyway, I think I've been saying for all of last year, all of the last 3 months, that H1 2025 was never going to be good for Tesla. Never. There's too much changing, too much scaling up, too many moving parts. The second half of the year, that's where I want to be scaled up with in size. And a lot of people might have noticed that I haven't bolstered my Tesla position as much as some of my other positions. That's because timing-wise, it doesn't make sense in my mind to load into Tesla for the first half of the year. I'm expecting a drop. I'm expecting this to continue to slide. That said, this sell-off has been quite violent, so I'm happy to start nibbling. But it's been on my charts for ages that I wanted to build my position. I've realised I've spelled that wrong as well. Build my position kind of into July, August, and have that ready for H2. Now, the price is very suppressed. I don't plan on buying too much more of Tesla, primarily because my focus for the first half of the year is building my crypto positions. That has had a massive pullback. Well, not really massive. They've been worse historically in previous cycles, so it's been quite stable. So I focused on building out those positions, and then I'll rotate funds into Tesla as the market shifts. But obviously, this all depends on liquidity and stuff in the market. There's a lot going on with macroeconomics right now, and it is intense, but it's fun. Lots of opportunity. For anyone that's super negative, there is a ton of opportunity out there. So where am I thinking Tesla's going to go? Like I said, I think we could see more downside on this one, but I mean, I think the market's due for a bit of bounce, and we can see that in the pre-market. Lots of green going on today, especially if we scroll down. Things look pretty good, but again, we could slide off into the open. Yesterday we also did have Redfin. They got bought out. a terrible day to announce it though, because it slid off, and pre-market as well, they got battered. So I did sell out of all of that yesterday for quite nice gains, right up near the peak of its value. I'm not convinced the deal is going to go through, because I don't know how the other company's going to pay for it without getting a load of debt. But that's a different issue. If it falls through, maybe I'll buy Redfin again. Maybe not. So I am looking for some real estate opportunities. If anyone's got any ideas on that, open to some research. Where's Tesla going to bounce? Again, we're now at peak volume here at 219. We could bounce there. We could fall lower. I would have a strong bet that if we did go sub 200, that 180 would be the bottom. That there's not much volume underneath there, so we'll see. To the upside though, again, I'm sticking with my targets for year end. I think there's going to be a phenomenal rally when things start ramping up. We start to put those numbers in our projections. I think there's going to be some actual front running based on fundamentals, not on hopes and dreams, which is what I think caused this rally initially. RSI, way oversold. Typically, Tesla doesn't like to be oversold too long. We do have the Def Cross active, but I think, let's have a look at the weekly, see what it looks like. And we'll take a look at options on Tesla. I imagine Tesla options might not be looking too hot right now for the short term, but long term ones probably looking pretty good. So RSIs could still have a little bit more downside on the weekly. Still looking bullish on the weekly, just not super great. Obviously, we're sad we didn't get the nice cup and handle, but I guess we could say it kind of is one, but not the prettiest pattern. Probably wouldn't trade it. But yeah, chart looks like garbage. Fundamentals still look good. Sorry, someone's just not. Okay, so open options interest for Tesla. We can see huge interest at 250, which we've dropped below quite considerably. We're now at 230. Obviously, the support areas where market makers normally want to keep price above to keep max pain. A lot of people probably shorting Tesla, as we can see on here with the high volume, and they don't want them to get any pennies out of this. So that's typically where they will try to manipulate price over. They can't always do it if they're outweighed, and in this situation they haven't. But again, after that, there's not a whole lot of sell pressure on the option side of it, but that could change. To the upside though, we get a lot of interest. I mean, a weekly bounce up to kind of 470 is probably not going to happen. It's definitely not going to get above 400, but a bounce maybe to 280, 300 could be on the cards here, judging from this. Let's push it out a week. Not much interest there. Certainly nothing to put your hat on. Let's push it out to the longer dated ones then, which is kind of where we're looking at. None of this short-term rubbish. Don't want that drama. Okay, so actually we're looking quite bearish on sentiment here for the 2026s. Again, I think these will move higher up. There's just a lot of uncertainty, a lot of people quite negative with sentiment on Tesla. It's going to be an uphill battle now for sure, unless the economy it's drastically better, in which case everyone will magically turn pro Elon, pro Trump, which is how they always do. People follow results, not words. So they really need to get some results. Let's go 2027, which is kind of where we're most excited to go. My dog's crying. Not sure if you can hear that, but it's quite funny. Super bullish expectations for 2027. Again, you want to be kind of scaled up before that happens. I think 2027 is going to be a ridiculous year for Tesla. So just think more big picture, what the company's doing. Don't let your emotions cloud your judgment on this one. I think that's the biggest mistake people always make with Tesla. Tesla sentiment is as volatile as the stock. And when sentiment flips to bullish, that's when the stock gets ridiculously excited to the upside. So, trade the sentiment on this one, not your own feelings. Put those aside. Think about what's actually driving the price, what's coming for Tesla. Okay, so there's not I didn't want to talk too much about Tesla because it's kind of on the back burner for me for a while until, later on in the year when we see some good stuff. I think, like I say, Q1's not going to be great, but I did want to talk about the pullback that we're experiencing right now. I do think it's just a correction. I don't think it's recession or a bear market, but I'm not sure if it's over yet. I'm expecting a bounce. Now the bit I'm not sure about is if this bounce is going to be the recovery out of the correction, or if we're going to have a bounce and then fall back slightly more. We need to see more information on what's happening with tariffs. Obviously, the market's reacting on pure fear, which has been traditionally a great buying opportunity. Bearish sentiment, I think, is like over 50%. Bullish is below 20, 30, something like that. But generally, the time periods after those levels are hit, it's quite bullish for the market. It's up over 10% in 6 months, so a very short time frame for recovery, and I'll show you that on the chart as well. In fact, I'll just show you it on the right side of here. We can see we've got the little chart of the SPY. Typically, when we have a pullback, you just put a little line down here, if that makes sense, and the recovery normally takes just as long as the initial drop. So the quicker the drop, the faster the recovery, and as you can see, this has been a very fast drop. The only other drops really are the big ones. The yen carry trade, that one was a fast one, and the COVID crash as well. The COVID crash was just amazing to have the opportunity to buy that, knowing the stimulus was coming. You just buy. That's all you want to do in those situations. So the SPY's down 8.6, the QQQ's down 12.6, IWM 13%. That's just small cap stocks. So definitely people not really interested in tech. Fintech got absolutely battered. A recession would be brutal for them, so I think a lot of people fear off on them. But I've been buying, super excited to be buying. Actually bought more fintechs. Was able to buy back into Robinhood after I'd been out of it. But a 4% drop in the Nasdaq is crazy. So based on crazy drops, that's when I like to buy. I still think we're in a bull market. A bear market is typically something classed over a 20% drop, so I think we're pretty far away from that, and we need to see some consistency in the drop. This has just been too violently, too much fear. I did put on here the GDP expectation. I think this chart initially triggered a lot of the downside drama with the tariffs and stuff, but a lot of people refer to it, but they don't actually look into what this data consists of, how they built that expectation. The trade balance on it was ridiculous. Imports really messed this number up, and if you know what's happening with tariffs, China, all those places where we have a lot of imports where we're threatening with tariffs, they're going to flood the market with product, and that's happened. Inventory is ridiculous. So when this front run happens, it obviously tilts this data in the wrong data. I think it should peter out quite quickly. It should correct, depending on what tariffs do. But there's only so much product you can get into a country before you're kind of cut off there. There's nowhere to put the goods, literally. We saw this during the pandemic as well. A lot of front running of goods. It took a long time for those goods to bleed out of the system. Typically, we see some prices dropping when that happens. But again, I think this data is wrong. A lot of the data that I've been looking at, inflation is not an issue. Tariffs can cause a bit of a one-hit bump. Maybe there's some cost push. Maybe the companies eat that up, but typically competition will offset that, especially if it's local competition in the long run. So I think maybe a short-term blip, but there's certainly nothing in the inflation numbers right now that is a concern. Seasonally, again, I put a chart on here. The market is being battered, but even on this chart, typically the end part of the year is where a lot of the good action is. But I'm not concerned. The last 2 years, I think retail investors have been really lulled into a false sense of security. So I actually do like they're getting a bit of a reality check on what an actual market does. It doesn't go up in a straight line. It doesn't just have 5% pullbacks and then goes parabolic. We will have these larger corrections. I think 10% we normally see once a year, I think. I can't remember the stat off the top of my head, but it's not super often, and traditionally they're very good buying opportunities. 5% drops happen 3 to 6 times a year, something. They're really common. A 5% drop you shouldn't really be afraid of. Bigger drops happen maybe once every few years, and then the huge corrections once every 6 years. We've had some huge corrections already, some huge bear markets. They've been very short and sharp, but we've had a few. I think we're technically coming up to a time period when we should be having some kind of recession, but I don't think we have that on the cards. Not looking at the data and not thinking about all the ways that the US government could stimulate the economy to offset that recession. They could want a recession to kind of have a economic reset. I don't think they will need to. I think that a lot of this is fear tactics to get the 10-year down, get the real estate market to unlock, and primarily make the US debt more manageable. That is the big focus. That's what Besant's plan's been. And, I think they're off to a good start. We have seen it start to roll over. So I'm very excited about that. Let me just check through my notes, see if there's anything else I wanted to talk about. We've got the data here that's coming out today and Wednesday. Now we're expecting them to be pretty good. If that data happens, that's going to trigger, a short relief bounce. And we need to see some follow through on what Trump's doing with tariffs or some more macroeconomic data to kind of identify if this is going to be a full recovery or if it's going to fade back away into another drop. I don't know which way that's going to go. I'm okay with more pain. I've got some cash aside. And if we do have a bounce, I'll probably trim out some of my positions, cap off some of those gains as well, get a little bit more in cash just because I'm not sure. Obviously, that plan might change depending on what data we get between now and then as well. So it's always, you've got to roll with the punches, as it were. Just checking through my notes, see if there's anything else I wanted to talk about. Mainly just wanted to talk about the market hates uncertainty. I think this drop's been quite excessive. I think Q1 could be weak for a lot of stuff, but I don't know. I think we'll be okay. I don't really see too much why there's such a big panic for now. I think there's a lot of people throwing the dummies out the pram. I've had enough with this stock market, whatnot, and big picture. I think a lot of fund managers and all that kind of stuff will be looking and waiting for some more clarity where they think the market, well, not the market, where they think the economy is going to go over the next 6 to 12 months. Typically, people think the big boys look really far ahead, but they're actually very short-sighted. They tend to be short-sighted and fairly slow to move. That's your advantage as a smaller retail trader. Other than that, I didn't make too many. I nibbled a little bit in my eToro portfolio, but I did make some big changes in my pension. I think 25% of my pension fund was going to a really stable. It was in the 85-40 Aviva mix. I've pulled that out. American Growth. Picked some funds that I like, the companies that are at really good discounts right now. Rotate that money in with the expectation that they're going to be just fine in the long term, and these prices are really good opportunities. Now I do have quite a bit of my portfolio for my pension invested in Europe. I don't like the look of Europe right now. It doesn't look good. There's very little growth coming from them. That part of my portfolio really only grows at 16% average per year. So there might be some opportunity there to move some more cash around in my pension, but we'll see. I tend to try and be a little bit safer in my pension, but these dips are just too exciting. They're too good. I don't know why everyone's so sad. Let's get buying some sales. That's us all done and dusted for another Tesla Tuesday wrap up. If you enjoyed this content, give the video a like, share it with your mum, your nan, your dog, your dad, whoever, and subscribe to the channel, and I'll see you tomorrow.